Hi all, and welcome to our weekly portfolio updates. As ever, as it seems at the minute, it's been a very sort of busy, news-heavy week in markets. Probably some of the more noticeable themes for clients' portfolios this week was the continued support of the bond buying program of the US Federal Reserve. I think markets were expecting a little bit more, but in the absence of a finalised stimulus bill, it wasn't a bad result from the Federal Reserve meeting. In terms of a quick summary of market movements, probably the standouts this week have been oil's continued rise, with Brent crude hitting $51. In terms of portfolios, we did bring back in a small exposure to oil in portfolios 3, 4 and 5, so that would have returned some nice numbers. Probably in terms of what's been the biggest differential of return this week, and as you can see from this table here, although it's been a fairly flat week in terms of numbers, all 5 portfolios have edged ahead of benchmarks. The biggest factor for this, for those of you that watch currency markets, has been the rise of the pound, as a Brexit deal seems to err closer and closer. But having said that already 5 or 6 times this year, we'll just interpret what the currencies are telling us. So at one point this week, the pound had gone to 1.36 versus the dollar. Where this made a difference for portfolios, and I think etched out sort of 0.4, 0.5% outperformance versus benchmark, has been in that we have retained our US hedged position where we can. We'd probably exit this position around $1.40, but yeah, in terms of where returns have been added this week, that's been a major area. US equity markets did hit record highs for the week, but these are only very new marginal highs, and to be honest, it's been a little bit of a sort of roller coaster and ride within a range, whether that be in the UK, where we're sort of back up to 6.5 from 6.3 range, to Japan, where again new record high reached, but it's been a very static 10-day period after that. In bond markets, not too much movement. As I said, if there'd been more words from the Federal Reserve with regards to long-term interest rate changes and that sort of topic of conversation, we would have expected to see more. But yeah, overall this week it's been flat, but been a good positive week for the portfolios. Thank you.